Welcome to Nestology. We are your hosts. I'm Jessica.
And I'm Shelly.
And today, Shelly is going to talk to us a little bit about refis, but I think first she needs to get some venting out of the way. Her phone's blowing up over here.
I know. And I was like, oh my gosh, I'm trying to be all calm. And I'm like, I need to take a breath. So some of y'all know that my mother has Alzheimer's and is in assisted living. So I just got the craziest text message.
It's very weird.
Yeah. So yeah, from the manager at the assisted living place. It's like all kinds of craziness in there. So I'm just like, oh my gosh, what am I paying $5,000 a month for when they're telling me she needs deodorant and her toothbrush looks gross and razors or have been used. I don't know. Anyway, I'm just on a lot of sorts at the moment because it just took me a minute to be like, oh my gosh, what are you seriously paying for when they're not even cleaning out her refrigerator? And she's like, we're throwing out the spaghetti. We don't know how long it's been in there. I'm like, you guys are the ones there every single day.
Yes. Well, I mean, one thing to send a list of some of the items that she needs, but one of them was cleaner for the toilet, the bleach tablets for the toilet, which, I mean, I feel like her cleaning
is included in the facility.
So why is she responsible for...
I don't, and they want Glade plugins or plugins for her room because it doesn't smell good. Well, they're the one maintaining it. I'm sorry, I'm a little...
No, I'm too.
Sources right now.
Well, and then
got this text.
And then her suggestion, it said, and maybe instead of bar soap, get body wash, because I think her opinion, she said, my opinion, bar soap is gross.
Yeah.
So it's an odd message.
It is really odd. I don't know. It threw me for a little bit of a loop. And then
she's over here taking deep breaths and trying to regulate.
I know. So if I sound a little wound up today, maybe that would be why.
Well, okay. So we are recording early. This one's not going to come out for a little while because when this comes out, I will be on vacation.
Yay.
So, but by this point, hopefully, that when you're hearing this, rates will be lower. So we can...
Yeah, let's talk about that.
Shelly is very happy. We had... Gosh. So, I mean, again, it's early, but she just got a text earlier. That was a good one, not the one from the manager. So what happened?
Yeah. I mean, just with the market, reacting to the jobs report this morning. Again, we're recording early, right? So this is, what is today? This is early September. So
yes,
hopefully things will only improve by the time you're actually listening to this one.
So this message about the basis points and everything, maybe because of this, you're going to be celebrating because interest rates will be so low. You'll be ready to buy a house or refinance.
Well, I mean, actually, as of right now, even, just this past week, we are at the lowest point in a year for rates.
Right.
But, there's still some movement that we're expecting to happen with the Fed meeting actually coming up September 17th, which you guys probably will be listening to this in October.
Yeah.
But there is a really good likelihood the Fed's going to drop the bank-to-bank rates, right, coming up September and then also again in October. So when this comes out, hopefully we'll even be in a better situation with rates because we have been waiting for this for, literally 3 years. We've been at this higher interest rate level. And it's just, I don't know, it's kicking everybody's ass.
For everything.
Affordability. I feel like the Grim Reaper when it comes to going over numbers with new clients because they're like, my payment is what? And I'm like, oh, I know we all want rates to be lower and just affordability in general.
Well, yeah, that's what I was going to say. Not even just houses, but the people who are trying to buy a house or they feel stuck in a house that's too big or too small because their interest rate. I've talked to the people, they were like, well, I have a 3% interest rate. My house is too big, but if I go to a smaller home, I'm going to pay more.
Yes.
So everyone's struggling, but then, there's a lot of other industries, everything's struggling with the higher rates. So it just makes affordability worse on everything.
I know it does. So I really, really do feel finally, and I feel like I've been saying this for a bit. The experts have not been exactly right over the last few years. We haven't really, Jessica, we were talking earlier about the normal markets that we have seen in the past, like prior to 3 years, we're
prior to the pandemic, honestly, because those years were weird too. There was nothing normal since 2020.
You're right. Really. So we haven't had the normal market shifts. And what we mean by that, it's like historically speaking, summertime is always our busy season. And That's when everybody's moving and that's the hot time, but it's like nothing has been normal for years and years.
Yeah. I get people who ask, they're like, well, is it better to list in the spring or the winter? I'm like, heck if I know anymore, because who knows?
I could answer that in
Who knows?
2019.
Yep.
but it's different now. But I really, really do this time believe.
We are looking into our crystal ball right now.
We
And
are.
when you listen to this episode, we are predicting the future. Interest rates will be lower.
Yes.
Everyone's going to be happy. And I will be on vacation. So I'll be happy too.
I know. I'll be calling and letting you know. I know, because I'm going to miss you when you're gone.
Yes.
But yes, because you're going out of town, all the everything's going to happen positive and
Yep.
business.
As soon as I leave town.
It's
Yeah.
Murphy's Law. That's what happens.
It is. You'll be calling me like, I'm so busy with refis. Thank you for leaving.
Thank you. Thank you. Yes. So refinances, we were going to talk a little bit about that. So one part of that, right, is obviously, a lower interest rate,
Yep.
lower payment. But you can also do a cash out refinance, right, to take cash out of your house. So some of the things I just kind of wanted to mention on a refinance, just so in general, people understand kind of typically how they work. Typically, all the closing costs are rolled into the loan. So there's nothing out of pocket.
Okay.
Okay. You typically skip one monthly payment.
That's nice.
Okay, so that's part. Now, if you have an escrow account, we're starting a new escrow account for your taxes and insurance with the new loan. So you actually get a refund of what you would currently have in the escrow account at the time of closing. You don't get it that day. The bank or the mortgage company that you're currently with will typically refund that about 2-3 weeks after you
Yeah.
close on the new refinance. So those are monies that you actually get to keep,
Yeah.
even if it's not a cash out refi.
Very nice.
So there's some additional savings in there. So I did want to share because one thing I do hear a lot is that with rates being where they've been, that they're like, oh my gosh, my rate's 4%. I could not refinance right now. But I just had a really wonderful past client that reached out. She bought her home like 10 years ago. And her rate was like 4%, but she ended up doing a cash out refinance. We paid off a substantial amount of debt and got her $100,000 back at closing for her to remodel her home. And she was actually saving $200 a month. Even though rates were higher, we paid off debt. If you count up the monthly payments that she was making, like she actually was still saving money. And that's the one thing I call it mortgage math. Because it doesn't quite make sense because most people will be like, oh my gosh, no, if I have 4%, I go to 7%, the payment's going to be higher.
Yeah.
Well, it's not really, she's been in her home for a long time. So think about it. You've been paying the principal down.
Yeah.
And so the balance is lower.
Mm-hmm.
And so her balance was still lower. And of course, paying off debt that usually, credit cards and things like that are a higher interest rate, a higher monthly payment. So she actually was ahead of the game. In fact, she was just sending me pictures yesterday of her remodeling. It was really beautiful. It was what she's done with her decorating. I'm going to go see it.
Oh, very nice.
Yes.
Well, another thing that, I even forget about it. Refinancing to get out of a FHA with mortgage insurance.
Yes.
Because, so I have a client who bought a home with us. You were the lender too. They are selling the property and they have an assumable, because FHA is assumable. And so we were looking at marketing that as an option to save money because they had like a under 4% interest rate. But for some reason, the numbers weren't lining up right for me. And I realized when I went to go review the mortgage statement, it's because they're spending like 175, I think, in mortgage insurance.
Right.
So if somebody, because I was comparing, like how much would someone save by purchasing the home with this assumption loan versus a new loan at the same price, but with the higher interest rate. And it was really close to the same amount. They weren't going to save a ton. It was maybe $100 less, but because of that, so somebody may, even though they're going up, if they're coming out of an FHA,
You're right. Absolutely.
it could still save them on, because it doesn't fall off anymore. Mortgage insurance on FHA is forever.
Well, there is a little caveat with that.
Really?
Yes. So if you put down 10% or more, it will drop off after 11 years.
Oh, okay.
There's that.
Very nice. Yeah, I don't think they did that.
To a conventional loan and then drop the mortgage insurance.
Yep.
But that's a good point, too, that you brought up the mortgage insurance, even on a conventional loan.
Yeah.
Right? If you refinance and you have more equity, so there's that potential savings as well.
Yes.
Glad you brought that up.
Yep. So there's different things. Now, one of the questions that I'm sure you get a lot, because I get it, is it a good time for me to refinance? Like, what should the numbers be? And, if I have a 7% interest rate, is it time for me to refinance? If it's 8%, so how do you help people determine when's the right time?
Oh my gosh, that's an excellent question. And I really hate to say this, but it is going to be very specific to each person's situation. But the reason why I say that is if you have a higher principal balance, you owe more on your home. If you've got a $400,000 loan versus a $100,000 loan, the rate difference at a $400,000 loan is going to make a bigger difference to that person than a lower loan amount.
Yes.
So it really kind of depends. I know how I hate that answer.
Well, that's ironic because that's the situation that I was just referring to with this FHA assumable. It's a $250,000 house. The mortgage balance is under 200. So that's why the difference was so small, because they're paying interest on such a small portion. So
Exactly. So there's not a hard and fast rule. I mean, I would say in the past, I would always hear people say something like, the rate's got to be 1% lower. Well, that's really not the case. If you have a $400,000 balance, you may have a big impact at, a 0.5% difference in interest rate. So really, it's if you have any questions, like with regards to your specific situation, it's best that you just call me.
Yeah. Okay.
Because, well, I was going to say call your lender, but just call me.
Call Shelly and say,
in case I'm not your lender. Yeah.
Is there, because some people bought literally 2 or 3 months ago and have over a 7% interest rate. And now, I got a pre-approval letter yesterday for a 6.3.
Yes.
So, is there a limit, like how soon you can refinance? So if I only bought my house 2 months ago, can I already refi?
Ooh, very good question. So the general rule of thumb is, it's a little tricky here. So from a client's perspective, there is no penalty. To refinance whenever.
I know what you're going for.
Close. Yes. But the lender actually does get penalized if you don't make 6 payments.
Yeah.
So not that you can't refinance, but you might want to talk to your lender first, because we do get penalized for that.
Yes.
I know Fairway at one point we were, looking at kind of waiving that possibly.
Yeah.
So basically what I'm saying is, I'll just come out and say it. So when a lender closes on a transaction, they get paid a commission. We all work on commissions. So if you end up paying off that loan within 6 months, the lender has to pay all their commission back, and they basically work for free.
Yes. So all that work for months and months helping you to get pre-approved and talking to you on a Saturday night, they lose money because they've paid their staff.
We have to give it back.
Yes. So they have to give all that money back.
And so it's not really a great thing for us, but really, like I said, we're going to be working with some people when the market does shift a little bit more. I've heard, rumors that Fairway is going to work with us on that. So that way we won't get penalized, because we do want our clients to be able to benefit as soon as possible.
Right. No, that makes sense. But I wasn't even thinking about, because I knew that happened if someone pays off their mortgage. So like someone who buys a house, takes out a mortgage, but then pays it off with the sale of another property a couple months later. But I hadn't thought about that aspect, that technically when you refinance, you're paying off the first mortgage.
Yes, and it's a whole new loan.
So it's a new loan.
Exactly.
Well, don't do that to Shelly.
I know.
She doesn't like to work for free all the time.
I really prefer to have a paycheck. Go figure.
Pay our bills.
I like to eat.
I know.
So anyway, so there's not really a time frame. So, I am monitoring right now. I've got a priority list of clients. If you want to be on that list, let me know. But I do have a list of people that I'm currently watching the market for. I know exactly what they're looking to do, whether it's refinance to get a lower payment, lower rate potentially, or, cash out refi. Everybody's got a little bit different situation, right? And so everybody on my list, I know kind of what they're looking to do, so that I can, we call it kind of the strike point.
Yeah.
It's like when it gets to that level, that rate, that monthly savings, whatever the case may be, that we can move quickly.
Yeah. So then you're calling, do it now, go.
Well, I know. And the conversations I'm having now with some of these clients is, let's go ahead and get ready.
Yeah.
Because a lot of times we do need to get like a new loan application. It might have been years. So I need to get a new loan application to, confirm like, hey, do you still have the same job? Like, what's going on here? So getting that new application done. There are some people that we're actually moving forward on as far as getting the loan underwritten, and we're floating the interest rate, which means we're not locking in the interest rate. We're continuing to watch the market, basically, getting the loan, basically what we call it, the paperwork started, the loan disclosed, get through underwriting, processing, all that fun stuff. So that way we can be ready to go. And when the rates do, hopefully drop very soon, that way we can go ahead and just lock it and close it.
Yeah.
And you're ahead of the game instead of the hustle with everybody going, oh my gosh, I got to refinance now. And then the lenders get, flooded at the moment, and it might take a little bit longer. So let's be proactive.
Yes, exactly. Well, that kind of led into my next question is, what does this look like? Because I don't think a lot of people realize, that this is doing the loan over again. So they're going to have to do all the paperwork, the same as when you buy a house. You're repurchasing your home from yourself.
Basically,
You'll do a new loan, and you'll also have to go to closing.
Yes.
As a title company. Because, like I said, I think a lot of people just think that this is just like I want that right now, and more instantaneous.
Good point. No, that's not the case. We do. It's basically you have to do a do-over.
So it takes like a month to do.
It could be way faster.
It can't. Yes.
Well, it depends.
Okay. So, not Shelley, of course. Yes, I was speaking more general terms. This isn't something that's just overnight. Like, I heard the rate is 6.3 today, so I want that, and let's just make that happen.
Exactly. No, we do have to, get the loan application done. There's paperwork involved. Really the main difference, there's still an appraisal, right?
Yep.
Typically, not in all cases.
Yeah.
But, so we do get an appraisal, check the value, goes through underwriting. We're still doing all of those things. One thing also to consider, just, at the closing, when you purchase your home, everything's done that day. With a refinance, in Texas, there is a 3-day right to rescind. What that means, there's a 3-day waiting period. Basically, you have the right to rescind the loan. You have the right to change your mind in that 3-day window. So you go into the closing, you sign the paperwork, you wait 3 business days, and then it actually closes.
Gotcha.
Funds. Does that make sense?
Yeah.
So, and if you, in the case where you get a cash out refinance, that's when you would get the cash.
Yeah.
It's the 3 business days after.
Perfect.
Yeah.
Well, and so that's just for people to prepare, because as I know everybody's watching the rates. There's so many people waiting to buy or refinance, but getting prepared for it, because it's not just going to be a phone call and I want to do this. So like Shelley said, you can start a file with your lender, or Shelley, because she's awesome.
Yes.
But get the paperwork going, because it is a lot of documents to collect. This is all worth it. I'm not saying this is like a negative towards it. I don't mean it to sound bad, but just be prepared for it, because there is more leading up to this. So you can start to gather everything as you're getting ready, so you can jump quickly when it happens.
Right. The only thing we may not need on a refinance is basically you're not really coming out of pocket money.
Yeah.
So we're not looking for your down payment monies. We're not necessarily looking at the bank accounts, and a lot of times we just don't use them at all.
Yeah.
Especially like cash out refinance. What do we need that for? You're getting money back.
Yeah. Well, we've got to make sure you still have a job.
Well,
we still have to make
key.
sure that your credit hasn't plummeted 200 points since you bought the house last year. So,
well, there are some options. If it's a VA, so if you're a veteran and you have a VA loan, or actually even but with a VA or an FHA, there are, it's called an interest rate reduction loan on the VA. So it's an IRRRL, VA IRRRL, or an FHA streamline, where there's a couple of options where we may not be even looking at, income, assets.
Okay.
We're not even, all we're looking at, have you paid your mortgage?
Yeah.
We're not looking at any other credit items at all. It's a mortgage only.
Oh, that's nice.
Right. And so, but there are, it's nice, but there are also a little bit of downside to that, right?
Okay.
I've got a client doing an FHA streamline, but we don't get a new appraisal. So the closing costs are not able to get rolled into the cost of the loan, because there's not a new appraisal. So there's no additional equity. Does that make sense?
Yep, it does.
So there are pros and cons to that.
Yeah.
But there are VA and FHA loans that are really, really simplified, that you don't need all the documentation for.
Well, that's good. Because, I know some people, lately especially, some people have been struggling. And that is always the hardest time to do something like this, is when you need it. We've talked about that before, like with HELOCs and stuff. You have to do it while you're in a good place, because when you need it, you don't qualify.
Get the umbrella before the rain.
Exactly.
Exactly. So
Well,
I am hoping by the time this comes out
yes.
that rates are they have dropped. I mean,
It is. Yeah.
yeah. I mean, we are in.
What is it? At a year low?
We are at an 11-month low right now. So October of last year.
Yes.
So it's the lowest it's been since
So
October
by the time this
of
comes
last
out,
year.
it's going to be 4%, right?
Oh, I don't know about
Everyone keeps asking, like, is it getting, when's
like
it getting
I
back
can
to 4%?
control it, like I have control over it.
Yes.
I know.
That's
but
what's happening.
we are getting around the 6.5% range ish,
Yeah.
right? Of course, it
Yep.
depends on credit. I'm going to say all the things. It's like
But I
that's
mean,
income
compared to
credit.
2 months ago, 7% for that
Oh, yeah.
same loan.
Absolutely.
So 0.5% already, and we're not even into September and October yet with the
Can
drops
you
that we're gonna.
imagine?
So you're welcome. I'm gonna go out of town. You can all thank me later for going out of town because it will help the
Thank
rates to
you.
lower.
Oh my gosh, I know, because that's always the case. Anytime
You start traveling
we
and
go
then
out of
everything
town,
happens.
Yes, then all the things happen. So
Yes.
when are you leaving?
Not soon enough. We're going to go experience fall in the Northeast.
Oh my gosh, I'm so
my kids are
jealous.
going to get to see leaves change for a change.
Yes,
Texas,
yes.
we don't get that. It's
get one tree.
green or it's brown.
We get one tree for maybe 2 days. Like, look at that yellow tree, and 2 days later, the leaves are gone.
Yeah.
That's fall
Green
in
and brown.
Texas.
That's it.
Yeah,
So.
that's all we have here. But anyway, that'll be fun. That'll be super fun.
Yeah.
But
Very excited.
I'm hoping I will be calling you and letting you know rates have
Yes.
dropped again, please. I know. We've been waiting for years and years. So anyway, guys,
Yes.
if there's any questions on refinances, I'm available. I'm happy to
Yes.
answer any questions.
And I'll have the link to Shelly's website with all of her info in the show notes. So make it easy for you to reach out to her if you do have questions. And you can also send us messages on our social media platforms. We are on Facebook and Instagram, Nestology Podcast.
Wonderful. Well, thank you all for joining us, where we help you make the best of your nest.
Bye.
Bye.